Welcome to the Iraqi Dinar Update channel, your trusted source for the latest news, analysis, and insights on the Iraqi dinar. We provide up-to-date information on exchange rates, economic developments, and key financial trends affecting Iraq's currency. Whether you're an investor, trader, or simply keeping an eye on the market, our channel delivers accurate reports, expert opinions, and government policy updates to keep you informed. Stay tuned for real-time updates and in-depth discussions on the future of the Iraqi dinar. On the same day, two articles emerged with seemingly contradictory headlines. One proclaimed, 146,000 dinars per $1,000. Dollar falls significantly in Iraq, while another declared, the rise in the price of the dollar against the Iraqi dinar, new economic repercussions. These conflicting narratives raise questions about whether the discrepancy is due to natural market fluctuations or if it is part of a broader strategy of misdirection, a tactic observed in previous currency revaluations. When studying historical financial events, such as those preceding the value changes in Kuwait and China, similar conflicting reports were used to obscure the timing of major economic shifts. Misdirection in financial reporting is not a new phenomenon. It has been employed by governments, central banks, and financial institutions to maintain stability in markets while preparing for policy changes. By sending mixed signals, authorities can prevent speculative behavior, ensuring that any impending shift does not lead to disruptive capital movements. The presence of conflicting headlines about the Iraqi dinar's value suggests that something significant may be brewing within Iraq's monetary landscape. Looking at Iraq's financial position, the exchange rate of 146,000 dinars per $1,000 implies an exchange rate of approximately 1,460 dinars per US dollar. If the dollar is described as falling significantly, it suggests an appreciation of the dinar. However, the second report speaks of a rising dollar, indicating a weakening of the dinar. This contradiction cannot simply be brushed aside as an error in reporting. Rather, it mirrors historical patterns of controlled market narratives ahead of significant monetary policy shifts. Kuwait's currency revaluation in 1991 serves as a prime example. Prior to the reintroduction of the Kuwaiti dinar at a stronger rate, financial news was flooded with conflicting reports. Some claimed the Kuwaiti dinar would weaken further due to the impact of the Gulf War, while others hinted at a recovery. This strategic dissemination of opposing narratives ensured that investors and speculators remained uncertain, preventing any premature accumulation of Kuwaiti dinars that could have disrupted the transition. When the Kuwaiti government finally acted, the currency was reinstated at a significantly stronger value, catching many off guard. Similarly, China's adjustments to the yuan over the years have been preceded by conflicting media coverage. Reports either emphasize the currency's strength or its susceptibility to devaluation, often depending on what best suited China's strategic interests at a given moment. Such misdirection allowed the government to enact changes on its terms, preventing speculators from manipulating the market in anticipation of a predictable move. Returning to Iraq, the presence of conflicting articles suggests that policymakers may be setting the stage for an adjustment. Iraq's monetary policy has been under scrutiny for years, with discussions surrounding a potential currency float, de-dollarization efforts, and alignment with international financial standards. If Iraq were to shift its exchange rate policy, either by floating the dinar or adjusting its peg, it would make sense to introduce conflicting reports beforehand to prevent premature speculation. One must also consider the broader economic environment. Iraq's reliance on oil revenue, its relationship with the US dollar, and its ongoing efforts to integrate into the global financial system all play a role in determining how and when a currency adjustment might take place. The Central Bank of Iraq has been working on compliance measures with international financial institutions, addressing corruption concerns, and implementing reforms that could facilitate greater foreign investment. A significant change in the dinar's value could be tied to these broader efforts. Furthermore, international players such as the International Monetary Fund, IMF, and the US Treasury have been involved in Iraq's financial system, guiding policies that impact the exchange rate. If Iraq were to make a major move regarding the dinar, it would likely do so in coordination with these entities. The timing of such a move would need to be carefully managed to avoid market disruptions. Historically, major currency revaluations have not occurred in a vacuum. They are preceded by periods of uncertainty, conflicting reports, and sudden shifts in financial regulations. The case of the Kuwaiti dinar, China's managed float policies, and even Vietnam's gradual currency adjustments all demonstrate the use of strategic misdirection. Iraq appears to be following a similar playbook, which suggests that something significant may be on the horizon. Those watching Iraq's monetary developments should pay close attention to patterns rather than individual headlines. The presence of contradictory reports is often a precursor to a major financial event. While no one can predict the exact timing of a revaluation, history suggests that when the media presents two opposing narratives, decision-makers may be preparing for a shift. The question is not whether Iraq will adjust its currency policies, but rather when and under what circumstances. For those who have been monitoring the Iraqi dinar's trajectory, these conflicting reports should serve as a signal to stay vigilant. The same patterns seen in past currency revaluations are unfolding once again, reinforcing the idea that Iraq is on the path toward a significant monetary change. Furthermore, international players such as the International Monetary Fund, IMF, and the U.S. Treasury have been involved in Iraq's financial system, guiding policies that impact the exchange rate. If Iraq were to make a major move regarding the dinar, it would likely do so in coordination with these entities. The timing of such a move would need to be carefully managed to avoid market disruptions. Historically, major currency revaluations have not occurred in a vacuum. They are preceded by periods of uncertainty, conflicting reports, and sudden shifts in financial regulations. The case of the Kuwaiti dinar, China's managed float policies, and even Vietnam's gradual currency adjustments all demonstrate the use of strategic misdirection. Iraq appears to be following a similar playbook, which suggests that something significant may be on the horizon. Thank you for tuning in to the Iraqi Dinar Update channel. We appreciate your support and engagement as we continue to bring you the latest news, analysis, and updates on the Iraqi dinar. Be sure to subscribe and turn on notifications so you never miss an important update. Stay connected with us for real-time insights, expert discussions, and market trends. Until next time, stay informed and keep watching for the latest on the Iraqi dinar. See you in the next update.